Welcome back to the Dividend Diplomats YouTube channel. You've got your boys here, Bert, the Hurt, and Lanny, Legend, the Dividend Diplomats guys, and we are coming to you to talk a little bit about dividend investing, about seizing the dividend stock investing opportunity when there is one there. There's been too many times when Bert or I don't go all in or go heavier on dividend stock purchases. So we're here to talk to you about the topic.
Well, I'm going to talk to you. But before we talk to you, smash that subscribe button. Give this video a thumbs up. Holler at your boys, the Dividend Diplomats. This is going to be more of a fireside chat video. We're going to obviously talk through a few companies here, give you some examples, but the reality is we're all trying to reach financial freedom. We're all trying to build our dividend stock portfolio. And in 2024, finding stocks to buy, finding discounts is very difficult. The
Yeah.
market's on fire. The S&P 500 is great. When a stock is down, it's not down for long. In fact, that dividend stock usually jumps right back up. So it's not a stock to buy for a very long period of time.
No. And I mean, for frame of reference, the S&P 500's up about 22%. More than likely we'll finish off the year in the green, back to back double-digit gain years here, guys. And, there's always the internal battle, right? As a dividend investor, let's just say you already have your emergency fund covered. Your checking account balance is right where you want it. Your savings is right where you want it. And you do have cash. And, you find a company you like the stock price, but it's either right around where you want to buy them, and maybe it's call it $100 stock, maybe it's $1, maybe $2, maybe $5 away from where you want to buy it, and you end up not buying it, right? How many people, first off, have been there? I'm included. Bert, I don't know about you.
We've all been there. And we always joke around about how Lanny's a stubborn Italian and he just wants to get it 25 cents lower. And sure, that's obviously a part of it because he is stubborn. He is Italian. And yes, he does do this, but we all do. I've done it for countless stocks. There are countless missed opportunities that I just have because I got a little too cute. I got a little too fancy and I just didn't take the easy play that was right in front of me.
Yeah, and when that happens, sure, maybe it does drop. Maybe it does. Do you buy it though? Or are you just gonna nibble? Maybe that's your nibble price.
Hmm.
And then next thing you know, the stock's up 3% in a few days, and you're like, oh well, it'll come back down. And then it's up 5%,
Hmm.
10%, 15%, 35% a few months later. And next thing you know, you either A, didn't get it, or B, you only got a little bit, but you're like, I should have went a little bit deeper buying that stock while the stock price was low.
Yep. Yeah. So in this video today, we're going to talk through this. We're going to demonstrate to you some pretty big companies. Some opportunities are missed. We'll tell you about some examples, though, of where we actually did capitalize on this. Times where we've trusted our gut and we've made the purchase and built the position, and other times where, we're left empty-handed saying, man, I wish I would have done more. I wish I would have just gone through with it. I wish I would have bought that stock.
Left holding the bag, guys. So, again, this is all about just a conversation, just to give us, a chance to give you our experience when it comes to dividend growth investing from, buying stocks. And, obviously we save a ton here. I know if you're a dividend growth investor, you're a saver more than likely. Let us know in the comments if you are. And, it's about seizing the opportunity. It's about buying the stock when you see any sign that it could be undervalued and it's in maybe just above that buy zone. Not here to say, oh yeah, just go all in, buy it. But more than likely than not, you should be buying it when it's there because you can't predict, as we all know, you can't time the market. You don't know the price of the stock movement. I mean, we're all retail investors here. So unless you've got some sort of other information that most don't see or don't read or don't have, you can't tell where things are going.
Yeah. And the reality is, we talked yesterday about one of my positions I've owned since the oil spill of BP. I couldn't tell you what my cost basis was. Like I couldn't tell you what I could tell you what the cost basis was, but I couldn't tell. Let me phrase it. I couldn't tell you what the purchase price was. So whether I got it at $32 or 32.80, 10 years later, it doesn't matter. And I think that's really the thing we want to
So
emphasize on this. Like, I could not tell you what the share price was at the time I bought it a long time ago. So just do it.
exactly. The younger me that was going all in didn't have as much capital as the older Lanny has, and who's not going all in on positions. I remember I used to scrape every penny, every dollar, and those things have paid off more than tenfold. Some
Mhm.
more than 15-fold. But now let's get back to buying heavier when you do see a stock you like. The most recent example right now, guys, was Pepsi stock.
Hmm.
Featured them, I think, a few days ago. They were in
Yeah.
like the 168, 167 range. And, I was like, oh, yeah, if they get back down to like 161, 163, sure, I might consider them. Well, in 5 days, they've gone up 3%. Now they're at $173. Just a few days.
Yep. Just like that,
Yeah.
Lanny.
And that doesn't even speak to when I was buying only about a couple shares when they were at like
Mhm.
160 or 161 about, 8 to 10 months ago.
Yeah. It's crazy how fast that changes, isn't it?
Yeah. And
Um,
I know you've got one right under your belt, but you did.
yeah.
This was a success story.
Yeah, one I just happened to do it was Archer Daniel Midler, Archer Daniels Midland, ticker symbol ADM. A few days ago, it was last week. I said it was trading the made 58s, 59s. I said if it gets in the low 57s, I'm going to grab two shares. Hit $57. I just grabbed two shares because you know what? It hit the price I wanted to. I threw down two shares. It's not a lot of money, but I at least took the step, made some action. I'll probably keep adding two shares here or there as long as it's in that buy zone before it jumps up.
Yeah, and one good recent success story for me,
Mhm.
I'll call it success. I'm a success. Razor Ramon. No, but was PACCAR,
Yeah, love this
PCAR.
one. Love this.
They were in the 91, 95 range for a while. I really liked the stock, so I just bought some tranches. I went hard. Again, they're trading over almost $100 a share. I was buying 10 or 20 shares almost at a time. You know, and then what I ended up doing was doing a sell and then a buyback right away at like $98 a share. And, pretty much in a month's time, they're up 10%. They
Love
were
it.
trading on September 10th, they were trading at 94.57. And I was like, still like, I ended up buying them higher afterwards because now I have some,
Yeah.
again, the wisdom now. It's like, wait, they're undervalued, just buy them. They're a great company, high quality business here, well ran business, and now they're trading at 103.62. So literally a 10% jump in stock price in a
Love it.
month.
I love it. I mean, that's the perfect example right there. You saw it and you conquered it. You said, I'm not going to have this be a small position. If I'm going, I am going hard and I'm not messing around. It did take you a while to get to the point where you were buying it. Like it took
Yeah.
you some time to
It
get
took a
there.
long time to get me there.
But when you did it, you had known what the prices were. You had known it was in that zone where you wanted to buy and you didn't mess around landing. I think that's such a cool
Yeah.
story here because
Yeah.
it's
I think at one point I was like, oh, if it's at 90, I'm definitely there. And then I was like, wait, it's never going to get to 90. It's fine. Let me just buy this business now.
I love it. And I can give you an example of a success story from me earlier in the year. It was my investing in the REIT area. You knew interest rates were going to come up and REITs were down and depressed. And I bought two REITs, one for me and one for my wife, hand over fist. I bought Realty Income. I bought a lot of Realty Income. I said I want to get to at least $60 a month in Realty Income. I was sitting at $40 a month. So I had to make up $20 a month in dividend income, which is not a small amount of margin. I'm looking at my purchase from September 23rd, 23 through May. I made it happen. And I was every time it hit low 50s, I said I'm buying it. So it got in 53, I bought five shares. 52, I bought five shares. I have a lot of small purchases 50, 51, 52, 48, 49. Every time I was in that zone, I just kept grabbing five more shares at a time until I made that position.
Yep.
And
And
now
then now
we talked about it yesterday. It,
$62 a share.
yeah, per month. And I could not be happier with that realty
Well,
income.
yeah, and you've got no, what I'm saying is you also have
Oh,
20%, a price appreciation.
yeah. Oh, I thought you were talking about the monthly dividend because that was right in line with where it was, but you're right. Yeah, it's popped up significantly, especially ever since interest rates went down. The example I was saying, my wife was American Tower. I kept scooping up American Tower for her when it was in the 190s. 219 now. We have 25 shares or $5,500 profit. So I'm happy I bought that position down before it popped up with interest rates. I ran through that opportunity.
Yeah. See, there's another success story. Here's another
Yeah.
story that I didn't take any action on, guys. This was about 6 to 7 months ago. Philip Morris, PM. Yeah, Sinstock. I think I featured them once or twice on the channel earlier on in the year. Trading in the upper 80s, lower 90s. I like kind of what they were doing in the heatless sector of the tobacco industry. Even though the financials weren't like balls to the walls, like, oh yeah, I can see them reshaping, transforming their business. So on April 15th, they were trading at $88.60. Fast forward less than 10 days, they were trading at $99. So up 12% in about, call it 2 weeks. All right, didn't buy it in the 80s. Should I still buy it in the upper 90s? No, I didn't buy it. Fast forward about a month and a half later, trading at $108 a share. So up another 9%. And at that point, I was like, well, that ship sailed. But did
So,
it? No, because it went up another $11 a share, most recently at $119.39. So up another 10% in just a few months. So since the beginning, when I was evaluating them and I liked it, I don't like people that smoke, but it's a good business model, unfortunately. But when I thought, oh yeah, it makes sense. I understand it. I see where they're going. It was in a good range that I liked, but it wasn't just at the price that I wanted, like by maybe a dollar or two, if that. We're talking probably between 1 and 5% within the range of where I wanted them, and
it's
now they're up 35%.
it's such a good example because it's you had this one, you saw it, and I'm sorry, I just can't keep saying it. It's a perfect example of it's a great company. You already own it too, and that's the thing. It's not like you were adding a new position either. It's an easy one where you could have added one or two shares. And I feel your pain on this one, Lanny, because it was right there, and I know we talked about it multiple times on this channel.
And you own it
I didn't
too, and it was
I
within
didn't do
our.
anything.
It was evaluated, didn't make a single move, guys. And again, so the learning lessons here
Mhm.
is, don't think about the nickels and dimes, but think about the big dollars that are ahead. Just think long term. Again,
Mhm.
take our 15 years of investing wisdom. That when there's a high quality business that you like, that you don't see how you run the doomsday scenarios, and you're like, okay, it's still probably fine. Just buy it. If you're on the fence of buying it, buy it. If you're on the fence of just buying one or two shares, buy 10 if you can, if you have the capital.
Mhm. Yeah, and especially if you have that position in the other one, like too, if it's one you own, just keep adding to it, keep growing that position. That one share, those two shares, they really do add up over time. And that's why I brought up the realty income example earlier. In a vacuum, those 5 shares at a time didn't seem like a lot, but when you started doing them, you start taking it step by step, piece by piece. Every single one of those shares made a difference, and now I couldn't be happier that I did it.
And hopefully this still plays out for people better than what happened with my position. But this could also go on the sell side. If you're looking to exit a
Oh,
stock,
oh,
you
yeah.
know, I I was very distasteful with 3M in the portfolio, WBD in the portfolio, and if you can catch that video from a couple weeks ago, this plays in the same way. Instead of waiting for, I could have waited until 3M. It hit the 140s, and I was like, okay, I
Hmm.
just sold but I could, the old me, like the 6 months ago, year ago, I was like, hey, maybe I'll wait till it's 150 now. No, I just press sell, and then Warner Brothers Discovery, based on some other reasons, I was like, okay, it's had a nice ride up in the last like month. I think it was like a 10% ride up. 3M had like a 55% ride up. I was like, yeah, I want to leave. And then I already had Pat Carr
Yeah.
waiting for me. So I was like, yeah, I'm going to swap what I thought was a slightly overvalued to an undervalued. Let me just get out
Yeah.
fully. And
I
then
love it.
it's only been a few weeks, and again, I hope 3M rebounds for everybody, and I hope WBD rebounds for everybody. But 3M is now down to 133, so
Mhm.
$7 from my sale price. And unfortunately, WBD is down. Um, I don't even know what the math is on that. Over 10% down since I sold.
Yeah.
So
Yeah. The lesson is sometimes it's It's okay to be decisive with your decision. It's okay. You're never gonna you're never gonna regret buying more assets, especially on the buy side. You're never gonna regret buying one or two more shares. You're never gonna regret just grabbing something when you think it's a value. Because again, 15 years from now, you're never going to remember what that share price was when you bought it. Except for
Yeah.
Lanny might.
Yeah, let us know what you guys think about this topic here about buying more when you
Mhm.
can instead of waiting for that 5 cent, $1, 1%, 5% drop in price to buy that asset that you're looking to really have in your portfolio. Did you wait until it hits that exact price? Or are you like, hey, I like the company, I like where the business is going, let me buy it? Because I know long term dividend investors, long term investors here, long term, you'll have dividend growth, price appreciation, the whole kit and caboodle. Let us know. And let us know if you guys got some stories. Just
Yeah,
pop it all in the comments.
exactly. I was gonna say we want to hear your stories of times where it's worked and times where it hasn't. Feel free to share whatever story you want. You know, a friend. You could make fun of a friend if you want to. That's always an acceptable option too. We'll get a kick out of that.
Yeah, and again, we appreciate you guys for stopping by. This is a little, as Bert said, little nice discussion here, bonfire talk here. It's all about dividend investing. It's all about getting better together. It's all about getting the financial freedom together, guys. So let's keep buying those dividend stocks. Let's keep adding to that passive income total, and let's get to this financial freedom goal, guys.
Subscribe, give this video a thumbs up, and remember, you're either with us
Oh,
or you're
that's
against us,
so right.
Jack.
There it is, guys. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.